How to protect yourself from yourself. Oftentimes, as traders, it's very, very important that we have a mechanism in place to protect yourself from ourself. Now, this may not mean like a whole lot to you if you are a beginner just getting started and maybe you never had any sort of real money on the line. So maybe I'm coming across as being a little overly dramatic. But for anybody that's been trading for an extended period of time, and maybe not even extended period of time, you know that many times our enemies are right in the mirror. The person in the mirror is what's making our life most difficult. And today, as of the recording of this video, I just went through something where it really goes to show how one choice you can make within your trading can really set yourself up for success via just simply protecting yourself from an absolute train wreck. So I'm going to walk you through a couple things and then explain how this overall strategy works and how the mechanism in and of itself can, again, protect yourself from yourself. And this all may sound a little goofy, but here was some of my trading today. And right there, lost $2,190, which was the absolute best case thing that could have happened to me. What am I talking about? How could I be saying that losing $2,190 was a best case scenario? And how did that actually protect myself from myself? Let me show you what I mean and dig down a little bit deeper into this strategy. Now, the first part of this strategy is to learn about the futures market, and there are many reasons for it. There's a lot of other videos on the channel that go into the power of futures trading. But in a nutshell, and I think a big reason why it makes sense, especially from the world of trading stocks or options, and unless you have that $25,000, you have that very, very pesky pattern day trading rule. Now, there's a lot of other reasons, and I'm going to show you one here in just a moment, to consider trading futures. But if you're not sure about futures, you've never traded them, you don't quite know what they are, check out, I'll put a link down below, totally free 4-part series that'll give you a good foundation to which you can build from within your futures trading. But step one within the strategy is you've got to make the decision to trade futures. But futures are awesome. They trade just like stocks or anything else. They use technical analysis, they use charts, all that. But like I said, one reason out of many, but a core reason, there's no pattern day trading rule. You can day trade as much as you want. And then the second thing to do within the strategy is to use a prop firm. Now, I'm going to go through and show you and base this on the prop firm that I use and recommend, but this is not necessarily unique to this prop firm. All prop firms offer a general structure such as this, but like I said, just for simplicity's sake, I'm going to use the platform that I am using and recommending within the prop firm world. So the way a prop firm works and how they can help you protect yourself from yourself is this. First, you need to go through a test phase. And within this test phase, you've got to pass. But even once you get into what are called the pro accounts, there are still rules and there are still protocols in place that are providing for all parties, them and yourself, safeguards. Now, it may not seem like a safeguard to you, but after you see this real life example, you're going to understand exactly how it was a safeguard. But the way it works is this, is you get a certain amount of purchasing power, and then there are certain rules that come with it. So what we're going to see here was 50,000 purchasing power. That was the account that ultimately you saw minus that over $2,000, meaning that I lost the account because the way it works is it cost $119. So if this were you, it would cost you $119 out of your own pocket. So at the core, that's the actual risk because that's the cost of the account. But as you saw at the beginning, over a $2,000 loss. So technically speaking, I broke that rule. Therefore, I lost the account. They took the account away from me. Now you can always get another account and go through it again. But as far as this particular account is concerned, because I lost more than $2,000 that trade, they took it away from me. But think about that. Did I actually lose the $2,000? I didn't. I only lost the account. So therefore, I only lost the cost of the account, which again, $119. But now let's take a look at and play the game of, well, what happens if this was my own money? What happens if this was an account, so futures or really anything? It could be you're trading stocks with your own money, you're trading options with your own money, you're trading crypto with your own money. But the point here is that you are trading with your own money. So let's take a look at this set of circumstances. So what we're looking at here is the trade, and now everything's already happened, so I can't unfortunately kind of show you the loss. That's why I want to take a screenshot earlier today because, I mean, like I said, this makes such a good example of what ultimately happened. But so to walk you through the trade that did ultimately blow up my account, which again, I sounds very dramatic, blew up the account. But again, if you were to blow up your account, all you're out, your only actual risk was the cost of the account. But in this situation, I noticed that the price and the trend was down, and I thought, okay, it's trending down. And then I also was looking and seeing, look at all these resistance levels. You have the VWAP, you have the 200 period moving average, you have the 21 EMA sloping downward, which I like to use within the world of futures. So there is a bunch of resistances above the price, on top of the fact that, again, the overall trend was very, very clearly in the downwards direction. And in my world, I'm thinking, okay, well, if I can get some sort of bounce upwards, because you don't want to chase, right? Just because the trend is down, you don't want to be shorting at lows and stuff like that. But in my mind, let's see some sort of bounce. And in my little perfect world, I was like, what would be great is if there could be a candle that bounces all the way up here, because wow, that would be getting pretty overextended. And if it could go up there to VWAP, that would be even better, because looking at the history, you can see, again, VWAP being that dotted yellow line, it's rejected the price there. It's rejected the price there. That would be fantastic. And you know what happened on that next candle? The price did indeed do that. The problem is it ended up going all the way up there. And this distance right here, because of it was a very volatile day, that was enough to be game over. And that was enough to knock me out of the game. Now that's the distinction here. That was enough to knock me out of the game with the prop firm model, because again, I violated that rule. So they said, okay, you violated the rule, we're taking the account. However, the flip side of that would be, well, Clay, if you're using your own money, then sure, you would have taken that loss. Sure, that would have been a $2,100 loss of your own money, but you'd still be in the game because you're not having your account taken away or anything like that. You're still in the game. And as much as I don't want to admit this to myself, I need to admit it to myself, because I was feeling quite bearish, and I thought, okay, this is ridiculous. This is going to get continuation down, and it's going to keep on working its way down throughout the course of the day. And this may not mean much to you if you're watching this video months or years from now, but at this moment in time, things have been very bearish. And I think I'm probably not alone in thinking, okay, give me a break. This thing is going to come back down. So if I was using my own money, again, I'm not sidelined from anything, because, well, I'm using my own money. I have not lost my account because I'm using my own money. So I would have been very, very bearish. And it's easy to always sit there and try to tell yourself, oh, you would have played this long because when you see what happens. But no, if I'm being honest with myself, I would have been still very bearish biased. And let's just see how the next candle is played out. So bearish bias if you're a beginner, meaning I would have continued to short, meaning I want prices to go down. So yes, you can make money in the markets when prices go down. That is known in shorting or going short. So I would have continued to be bearish biased. I would have still wanted to go short. And then we can see what happens there. Up it went some more. Right there, that candle is one that could easily sucker in shorts. And then even after that, the price continued to make a move and then went even higher. And this move here, as much as I would love to have told myself, oh, you would have avoided that all. No, I remember my bias. I would have been absolutely crushed, and that $2,100, that would have been my own money to begin with. But again, I would have still been able to trade because it's my account. I didn't lose the account. That would have been thousands upon thousands upon thousands of dollars more that I would have gone into the hole. Yes, I know it's easy to look like, well, Clay, you would have probably bought the break out there. You would have bought the break. No, I wouldn't have. No, I wouldn't have, because I was bearish biased, and I would never have thought that sort of move would have happened without at least a little bit of a pullback. But there were not even any pullbacks at all that could have made anything even maybe possibly still profitable from the short side. But I did not experience any of that. Why? Well, because I lost my account and there was a pause. Now, the way prop firms work is you can have multiple accounts, and I actually traded the other accounts, after things settled down. But as far as this account was concerned, you have to kind of sign up for another one. But all of that is taking you away from the market. It's pulling you away. It's giving you a chance to just take a deep breath and relax. But had I still been using my own money, then this would have been a disaster. And I've been there before, because prop firm trading with futures, I'm not saying it's brand new. But I've had plenty of instances, and I think a lot of traders have too, where if they're honest, they're like, yep, I've been here. It goes up, you take a loss. I want to get that loss back. At least I can still keep trading. Goes up, you take another loss, and that loss gets bigger and bigger and bigger. But literally, the only cost was the cost of the account. So, no, it's never fun to necessarily lose a prop firm, but by losing that account and by having the loss only be the cost of the account, it protected me from having, with my own money, something far, far larger than just simply the cost of the account. And that is a built-in risk mechanism of the prop firm accounts. Is if you break the rules, you're out, you're on the sidelines for a bit. Now, again, you can always jump back in, but there is going to be a chunk of time where you are now on the sidelines. And that moment of time of being on the sidelines is often what we need as traders, because it allows us to chill out. It allows us to kind of reassess the situation. It basically forces us to go on a walk, if you will. Now, because a lot of times it's like, no, I'm not going to go over. I'm going to keep going. It's like, that's the worst thing you should be doing. But with the prop firms and the way they're structured, it's going to force you to, quote unquote, go on a walk, because it's knocking you out of the game. And I can say with so much confidence, I'm glad I was knocked out of the game, because way too many times before in my trading career, I know that I've had real money on the line, and I'm not knocked out of the game because, well, when it's your own money in the account, you can keep trading if you want. And sometimes that's the absolute worst thing that could be done. So I would highly recommend to, number one, learn about futures, get into futures. And then number two, get into futures with a prop firm. And like I said, the one I use and recommend is right here. I'll put a link down below because they are always running promotions. I'm not going to really mention the promotion by name, because if you're watching this video months or years from now, I'm not sure what the promotion will be at that point. But check out the link down below, and that will allow you to get the promotion. And also, it serves as a means to support the channel if you're looking as a way to do that. But yes, how do you protect yourself from yourself? Learn futures trading, get yourself a prop firm, and if you blow up an account, that's okay. That's part of it, because as you saw here, if I did my job right, that in of itself can be a built-in risk mechanism to protect yourself from oftentimes our biggest enemy, ourselves. So if there's any questions or anything like that, make sure you leave those down in the comment section. I'd be happy to try to clear anything for you. But yeah, be very careful of, well, yourself.